Believe it or not, Russia is connected to the huge news coming out this morning that the Clarity Act, the bill backed by the $30 trillion in institutional money, just got shelved by the Senate. Now, before you assume what I'm about to say, no, this isn't Russia reaching into Washington and sabotaging a crypto bill. I know that that's the version already spreading online and this morning, but that's not what actually happened.
Not this time. It never happened.
But there is a real connection here, and once you see it, you're gonna understand exactly why Clarity stalled and exactly what to watch for next. At the same time, on the exact same morning, Russia's central bank dropped its own crypto news, drafting regulation to launch an organized cryptocurrency market at home. Two Russia headlines, one asset class in the same 24 hours, and Bitcoin Twitter did what Bitcoin Twitter always does. It connected the dots into the loudest possible story. So today, we're doing something different. We're gonna slow down, look at what the reporting actually says, and separate the real connection from the fake one, because the real story is honestly more useful to you as an investor than the conspiracy. I'm Sophie, this is Simply Bitcoin Satoshi. Let's get into it. Let's start with why this bill was supposed to sail through in the first place. Coin Bureau laid it out this week. BlackRock, Charles Schwab, Fidelity, Goldman Sachs, and Grayscale, 5 institutions controlling a combined $30 trillion, all publicly backed the Clarity Act ahead of the August recess. That's not 5 crypto exchanges lobbying for themselves. That's the largest asset manager on earth, one of the biggest retail brokerages in the country, and 2 of the most powerful names in banking, all pointing in the same direction at the same time. That's the kind of headline that got people like Patrick Witt firing back at the pessimists. Quote tweeting Coin Bureau with basically the largest asset manager in the world just endorsed this and you're still blackpilling? For anyone who needs a refresher, the Clarity Act is the bill meant to finally settle the years-long turf war between the SEC and the CFTC over what a digital asset even legally is. A security, a commodity? Right now, the answer depends on who you ask. Clarity is, in the name, supposed to end the ambiguity, and every one of those 5 institutions has said publicly that regulatory certainty is the missing piece before they deploy real size into this market. So walking into this week, the expectation was simple. Thune files cloture, the Senate votes Thursday, and the last major piece of U.S. crypto market structure gets one step closer to the president's desk before recess. But that's not what happened, and this is where things get a little interesting. Here's what every single one of those institutions and countries actually have in common. They're actually trying to figure out what to do with Bitcoin, how to regulate it, tax it, control it, or leverage it. What none of them can touch is a coin sitting in your own wallet with your private keys. Whatever happens with the Clarity Act, whatever the Senate decides about floor time this week or the next, self-custody is the one position that sits outside every regulatory framework being built right now. The Bitcoin Way helps you get there properly. There's a free 30-minute consultation at thebitcoinway.com/simply. Tell them Satoshi sent you. Here's where I actually need you to listen, because this is the part that gets mangled everywhere right now.
Can you hear me now? Good.
Eleanor Tourette, one of the most plugged-in reporters covering the Senate crypto policy, broke down the mechanics this morning. For Thune to set up a Thursday cloture vote on Clarity, he needed to file cloture on the motion to proceed today. That's just how the Senate clock works. He didn't file it. Why? Because according to people close to the process, the Russia-Iran sanctions bill is taking precedence to the floor this week instead. Read that again. It's not Russia reaching into the U.S. Senate and killing a crypto bill. It's the U.S. ourselves. Senate, with an extremely limited number of legislative days left before recess, choosing to run a sanctions bill through the floor before Clarity gets its turn. CoinDesk's own reporting confirms the same thing. The Senate is putting off Clarity for now, as leadership pursues floor time for unrelated bills, while the crypto industry waits its turn. Now, the Bitcoin community is furious about this, absolutely. Crypto Rover posted, "Stop these delays" this morning to 250,000 views. Watcher Guru and the rest of the aggregator accounts blasted it out to hundreds of thousands more within the hour. This frustration is very real, and this is now the second or third time that the bill's been pushed to the brink of a recess deadline. But frustration about a scheduling conflict is not the same thing as a sabotage plot. What actually happened is Congress has a finite number of days before August 8th, and this week, Clarity lost the floor time fight to a bill that happens to also have Russia in its name. That coincidence, and only that coincidence, is why this got so tangled online today. Here's the part that actually matters going forward. Industry stakeholders are now telling Terret it's imperative that leadership at least begin the closure process before recess. Translation: next week is the real pressure point to watch, not this one, maybe. While all of that noise was happening, something else happened that got buried under the "Russia did it" narrative, and it deserves its own spotlight. The Bank of Russia announced that it has drafted its first regulations to launch an organized cryptocurrency market inside the country. In their own words, the Bank of Russia has created conditions for organized trading in digital currencies and digital rights. Under the framework, each exchange sets its own trading rules and calculates market and weighted average prices for these instruments. The central bank has also created a brand new category: digital depositories, custodians that will hold the official records for cryptocurrencies and digital rights. And these depositories will need minimum equity somewhere between 50 million and 200 million rubles just to operate. Watch Guru picked this up fast, over 437,000 views within hours. Bitcoin Magazine had it too, calling it exactly what it is: Russia drafting the first regulations to launch a cryptocurrency market at home. But here's the nuance that got lost in the noise this morning. This is not Russia throwing the doors wide open to a Wild West crypto free-for-all. It's the opposite. It's a tightly state-controlled framework where the central bank keeps a firm grip on who trades, who custodies, and how prices get set. This is regulation as control, not regulation as liberation. And there is nothing, not one line, not one source connecting this to the US Senate calendar. Russia's been working towards domestic crypto legalization for a while now. I actually reported it my last episode. If you haven't seen it, check it out. Largely as a way to route around sanctions and manage capital controls. This is Russia solving a Russian problem. It landed on the same Tuesday as the Clarity delay. That's the entire connection. If you watch the show, you know what we're about: freedom of speech, moving Bitcoin forward, owning your own money, and not asking permission. The Rumble wallet is built for exactly that. They just launched their new wallet, and the setup is simple. Head over to wallet.rumble.com/simply and use code SIMPLY to get $10 free today. Self-sovereign, self-custody, and it supports a platform and creators who actually stand for something. Go grab your $10 at wallet.rumble.com/simply, code SIMPLY10. Here's what should actually have your attention instead, because the institutions aren't backing away from this trade. Charles Schwab, a $12 trillion firm, went on CoinDesk this week and said flatly they don't think Clarity's impact is priced into Bitcoin yet. Their words: passing the Clarity Act could reignite upward momentum and bring back a real wave of institutional adoption.
Clarity has been the major fundamental catalyst we've been tracking all year. And to clarify, we do not think it's priced in at these levels. We've been tracking the daily Clarity Act odds of passage in 2026, and we look at that with a consortium of different factors and see what's been driving Bitcoin's prices on a day-by-day basis. And in general, year to date, on average, Clarity Act odds, whether they're increasing or falling that day, can only really explain about 4% of Bitcoin's daily price move. And so we think that Clarity Act passage is not being priced into Bitcoin here. And I think that's important for two reasons. So first, If it gets delayed beyond summer recess, first, we think the odds of it passing before midterms are very low. Once you get back from summer recess, it's campaign time ahead of midterms. And so in that case, we don't think that would be a negative for Bitcoin's price. It doesn't appear to be priced in at these levels. The flip side, if it were to pass in the next couple of weeks, we think that is really serving as a legislative call option. Earlier this year, first we launched trading, and another large financial institution had a high-profile ETP launch, and that both of those were earlier on in the spring. And what you saw around that time is Bitcoin price rallied about 25% because you had a return to this institutional adoption narrative. And so we think the passage of the clarity could reignite some upward momentum. I don't want to say 25%, but we think it could bring about a return to the narrative of institutional adoption, which has kind of quieted it down over the past few months.
Their headline framing was almost aggressive, surprisingly. The bull market is about to start, maybe? And notice how the market's actually behaving. Bitcoin isn't pushing this delay. It's sitting in a holding pattern, which starts to look a lot like the market waiting for the real vote instead of reacting to a week of scheduling noise. There's a second tailwind building right underneath this one. Former Fed Governor Stephen Moran says that this week he thinks current inflation is much more likely to be transitory. His words, not driven by monetary policy, not driven by fiscal policy. And if it were policy driven, you'd see it show up in the money supply. That's a direct shot to the sticky inflation forever narrative that's been used to justify staying higher for longer.
It's not like it at all. Right now, through this lens, monetary policy looks pretty neutral, which tells you that to the extent that we've had higher inflation readings in the last 6-9 months.
Persistent, might be temporary. Actually transitory this time.
It's much more likely to be transitory. It's much more likely to be temporary this time because it's not driven by policy. It's not driven by monetary policy. It's not driven by fiscal policy. And so as a result of that, because that would show up in money also, right? The money supply doesn't care what the origin of the money is, whether the money originates at the Fed or originates from Treasury or internationally, right? If it were policy driven, it would be showing up in the money supply, and that's not happening. And so this is telling you higher inflation right now is much more likely to be transitory than it was after the pandemic. And the orthodox.
And after the pandemic, when you looked at it at these, it showed that there really was a serious increase, and we should have noticed that it was not going to be transitory.
Absolutely. These would have been, 5-alarm fires.
And people that say that it all it was supply chain disruptions that no one could have controlled that caused the inflation, this puts that notion to rest, does it not?
Yeah, I think that this type of analysis is heavily indicative that the supply chain analysis was not the major driver of the inflation that we had, or even if you really think that the supply chain problems we had were a major driver, that they were the type of driver that monetary policy had a responsibility to counteract.
If that view gains any action inside in the Fed's two-day meeting, that opens the door to earlier rate cuts. And rate cuts have historically been rocket fuel for Bitcoin. So line it up, a potential regulatory unlock from clarity, a potential monetary unlock from a Fed starting to question its own inflation story. Those are two catalysts building in parallel while everyone online is arguing about Russia. One more thread before we wrap, because it proves that the Bitcoin world just isn't speaking with one voice right now, even at the top. Michael Saylor put out a statement this week. Bitcoin's core design is set in stone. Protocol changes should be rare, conservative, and driven by necessity, not ambition. Don't fix what isn't broken. That's a direct shot at BIP 110, a proposed protocol change that's been stirring real pushback inside the community. One post summed up the mood bluntly, calling it the latest outbreak of the "I just heard about Bitcoin and I'm here to fix it" syndrome. And that alone pulled over 312,000 views. So when institutions are fighting for regulatory clarity on the outside, there's a live fight happening on the inside about how much Bitcoin itself should even change. That's a fault line worth watching. Disagreements like this have caused real splits in the space before. And if you want to turn your dollars into Bitcoin the easy way, Bitcoin Well makes it simple. No headaches, no exchange games. Buy, sell, and receive Bitcoin directly into your own wallet. Head to bitcoinwell.com and tell them Satoshi sent you. So here's where things actually stand once you strip out the noise. The Clarity Act didn't get sabotaged. It got bumped by a Russia-Iran sanctions bill fighting for the same scraps of floor time, with the next week now shaping up as the real test. Russia, completely separately, is quietly building its own tightly controlled Bitcoin framework at home, and underneath both of these stories, you've got a $12 trillion firm calling Bitcoin's next leg not yet priced in, and a Fed governor cracking open the door to cuts sooner than the market expects. None of that needed a conspiracy to be worth your attention. It already was one. Thanks for watching Simply Bitcoin's Satoshi. If you enjoyed this video, smash the like and subscribe. Follow me on X at InternetSophie. And as always, stack, slay, and stay bullish, baby.